Welcome to Core Finance, where we're joined by Campbell, who's an analyst at Spreadex. How are you today, Connor?
Very good, thank you.
Okay, market's in summer mode, but still plenty going on?
Yeah, there's still, it's slow, but there's enough, central bank, intrigue and bits and pieces like that. And, at least we're sort of hitting earnings season proper now. So if there is a dearth of news, you've always got some company reporting to, try and liven things up.
Okay, let's have a look at the slides you brought in.
Yeah, we've had inflation this morning fall to 2.6%, which obviously is still pretty high, but isn't 2.9%. It's not 3%. I think it's pound negative really. If the Bank of England weren't ready to act on 2.9%, then I don't think they're necessarily going to act on 2.6%. Basically, especially now they've got the argument that they can wait. They can wait until next month. They can see whether this is now a downward trend or if it was a blip. Blah blah blah. So I think that the August meeting is now probably a bit of a write-off, really. And you've had, the last few months and weeks, an increasing split in the Bank of England. I think that might now be, given that inflation figure, that might be overplayed. But at least heading into August, it might now be September beyond, and we'll see what the next inflation figure does for this current month. Our clients have been selling around that 1.31 mark, before this inflation figure anyway. I think just because the pound's climbed quite high in the last week, mainly on dollar weakness rather than pound strength. So there's plenty of room for it to drop and still have kept on to a decent amount of last week's gains, basically. So I think it could be in for a fall. You still, you've got Carney speaking this evening, I think, at the launch of the new £10 note. Whether he puts any rate hike information into that, I doubt, really. But, Carney speaking, so it's always worth keeping an eye on that. UK retail sales on Thursday, I think they're meant to bounce back from minus 1.2% to 0.3%. But again, estimates have been fairly squiffy recently, so it could be worse. But like I said, selling around the 1.31 mark.
Okay.
Continuing the sort of the central bank focus, really, you got the ECB meeting on Thursday. Draghi's been sort of making some hawkish noises of late. That's helped the euro out immensely. But also at the same time, the dollar having, the dollar's own weakness, be it the Fed seemingly delaying their rate hike last week, or, this week the latest healthcare bill delay and what that could mean for an infrastructure and tax plans down the road. It's very, very, whereas it was pretty uniform, people either closing out at 131 or selling at 131 for cable. It's very mixed around the euro dollar at the moment. I'd say almost evenly split between clients buying and selling. I think it really depends on the tone Draghi strikes on Thursday. But like I said, for the pound, it's climbed quite high. There is room for it to fall without it suffering too much, really.
But we're through 115, so it's a bit of a buy the rumour, maybe sell the news on Thursday. So until that happens, it's a bit of a squeeze then.
Yeah.
Okay.
Unilever has a very good year, sort of kick-started by that Kraft Heinz bid at the start of the year. Then, even though they rejected it, it prompted a business review. They're selling their spreads business. They announced a €5 million share buyback. So a lot of good news at the start of the year for Unilever. That has kept it ticking over nicely. I think it was its first quarter figures earlier in the year. I think in April, very healthy. Turnover was up 6.1%. Underlying sales up 2.9%. They hiked the dividend 12%. So all of its key financials basically doing very well. It's effectively, that figure in, end of May, start of June, that was an all-time high. It's not too far away from that at the moment, basically. I think, a bit of pre-election and post-election jitters perhaps dragging it down at the start of June, but it's bounced back towards that, £43 mark since then. It's, at the start of the week, it was announced it was in a bidding war for, I think, Reckitt Benckiser's food business. And French's mustard being the main attraction, I guess. I think that's around $2 billion. So I guess they'll use the money from the spread sale to fund that if they do end up going through. There are a few companies bidding for that business at the moment. I think investors would like a bit more news on that, how far along that bid is, etc. I think elsewhere, revenue is expected to rise 5% to just over €27 billion. Everything about Unilever is doing pretty well at the moment. Our clients are just buying around under that £43 mark, perhaps looking for it to climb back towards all-time highs on Thursday.
Okay.
EasyJet, another stock that's had a very good year. You can see that one blip in mid-May that was when its half-year figures were announced. It announced a headline pre-tax profit loss of, I think, £212 million, which is far, far worse than the £21 million loss they announced last year. But beyond that headline figure, things were pretty good. I think revenue was up 3.2%. Load factor, which is its capacity basically, was at a record first half high of 90.2%. Passenger numbers climbed 9%. So beyond sort of the currency fluctuations and that impact on pre-tax profit, things are pretty good at EasyJet at the moment. You had at the end of last week them announced that they're, creating, EasyJet Europe based in Vienna to allow them to continue to operate post Brexit. So it seems to be taking the necessary steps to, ensure its safety in the next few years. That's impressed investors. It's impressed our clients as well. They're buying around that £14 mark, despite it having climbed so high. I think even if it does dip a bit, perhaps on its third quarter figures on Thursday, our clients are happy in general with where EasyJet is at.
And they're not concerned about the CEO flying off into the sunset?
No, I think it was already announced. Obviously, she's going to ITV. Again, that's the kind of thing that if there is any update on that on Thursday, that is only going to please investors. But I think it was a known issue, basically. It wasn't a shock that she's heading to ITV yesterday. It was always known that she was going. It just wasn't known where, basically.
Okay.
And the Sports Direct stock that its performance has been middling, but its financial performance sort of is far worse than the chart suggests, basically. It's had, as ever with Mike Ashley, there's been a few surprises throughout the year. It spent 78 million entering the US market through two, I think, loss-making chains. I think Bob's Stores and Eastern Mountain Sports, which again doesn't necessarily have any name recognition or, by the sounds of it, much financial, worth. Investors and analysts weren't impressed with that. They said it was a distraction from what should be Sports Direct's focus of improving its UK business at the moment. And last week you had Sports Direct, Mike Ashley through Sports Direct taking a 25%, 26% stake in Game Digital. That sees it join Debenhams and Findel and French Connection as part of Mike Ashley's sort of flagging retail empire. Whenever he thinks he's got a bargain, he seems to pile in on it regardless of whether it's a sensible move or not. I guess with such an idiosyncratic leader as Mike Ashley, you're always going to get these sort of issues, really. Its financial performance, again, is really not looking very good. I think pre-tax profits expect to fall from 275 million to 126 million, largely on the basis of the weakened pound. Sales are expected to jump 10% to 3.2 billion, but I can't really see anyone focusing on that, instead focusing on the huge pre-tax profit loss. Our clients, even though there is room for it to grow, it was at 320 earlier in the year. Our clients just they don't want really anything to do with Sports Direct at the moment. They're still selling just under that £3 mark. I think they're looking at it's got a lot of issues to sort out in the second half of the year, and a lead that doesn't particularly seem interested in sorting them out, really, and has his eye elsewhere. So our clients aren't interested. They're selling at the £3 mark.
And of course, 300 pence was the IPO price 10 years ago.
Oh wow, really?
So there we are. We've done. We've achieved. We've maintained that level. But on that note, Campbell, financial analyst at Spreadex, thanks for coming.
Thanks very much.